In this video, we're going to discuss zero-based budgeting, which is sometimes abbreviated as ZBB. So zero-based budgeting is saying that every single line item in a company's budget proposal needs to be justified. For example, if we're trying to figure out for the first quarter of the upcoming fiscal year what's going to be the SG&A expense, and we might need that because we want to put together a budgeted income statement, and SG&A expense is going to be on that income statement and so forth. So we're trying to figure out what is our budgeted SG&A. One way of doing it is to go back to the SG&A expense from the prior year and look at each quarter and see, okay, what was the SG&A expense? And we could go, and let's say this is for the prior 4 quarters. We go and we see, oh, total variable SG&A, $72,000 in quarter 1, $90,000 in quarter 2, and so forth. And then we've got some fixed SG&A, property taxes, insurance, depreciation, advertising, executive salaries, and so forth. So let's take advertising. And so let's say we say, okay, well, we're trying to figure out SG&A. We want to spend some money on advertising. Well, it looks like every quarter, the prior 4 quarters, we spent $20,000 on advertising. So we need to spend at least $20,000 on advertising. And maybe the people in the marketing department even make a request to do 25 or something like that. Zero-based budgeting says, no, forget about all this. Maybe we'll spend 20,000, maybe we'll spend 25. Who knows what we're going to spend? But we're not just going to take it for granted that, well, every quarter we spend $20,000 on advertising, so therefore we should spend at least $20,000 on advertising. It doesn't work like that. We're going to go through each line item. For example, the executive salaries. We've been paying $55,000 every quarter for executive salaries, but we're not just going to take that as for granted for quarter 1 of the upcoming year. We're going to go through this line item and say, okay, let's start from the ground up, and that's where you get the phrase zero-based. It's basically saying, look, we're going to start as if nothing has been approved. We're going to start as if this is zero. Or let's go back to the advertising. We're going to start as if our advertising is zero. We're not spending any money on advertising. But then we're going to go and someone says, oh, okay, I think we should spend $3,000 on digital ads for this reason. I think we should spend $10,000 on television ads for this reason, and so forth. And then each of these things is going to be evaluated, and a decision will be made of whether this is a good idea, whether this is a good idea, and so forth. And that is how we will derive whatever quarter 1's advertising is going to be, and so forth. And we would just go through each and every line item, and it's not saying we're going to make it zero. It's just saying that we're going to pretend that we haven't approved anything. We're not going to start. We're not going to start at 20,000 and say, okay, should we add to the 20,000? We're going to start at 0 and say, okay, how much should we be spending on advertising for the first quarter of the upcoming year?